3 minutes on the markets. And Skylar, we've only got 3 minutes to talk about all of the risk events that are facing markets today. There's the oil meeting a lot later on today. But before that, we are likely to get the Supreme Court giving its verdict on tariffs, and we are going to get payrolls. What's your focus going to be on?
I think maybe we start with non-farm payrolls because that's very much the big one. And part of it is the context of where we're coming from. So data so far this week, I think, if anything, has leaned on the strong side. But it's been kind of all over the place, right? So JOLTS data, the headline number was quite weak, but the mix between quits and layoffs was strong. You had ISM manufacturing weak, but services strong. And so the market's really looking for direction from the payroll number today, especially given that the March meeting for the Fed is priced at something like 11 basis points. So that kind of, is that going to get pushed out? Is it going to be kind of firmed up in terms of that cut pricing? And I think certainly if we get an inline print, consensus expects a relatively positive outcome. So unemployment rate ticking down, that can kind of give the go-ahead for the equity market to rally because it tells you that the labor market is still strong, but the direction of easing is still firm despite that.
Skylar, how are we thinking about the Supreme Court, the potential Supreme Court ruling on tariffs and how that affects treasuries? I mean, how much is priced in, essentially, in terms of a potential narrow ruling, if that's what comes through? What is priced in at this point? How much vulnerability is there on that?
I think there is a fair amount of vulnerability in the short term. So the risk here is that they're ruled illegal and you have to do repayments of the money that's been collected so far. Now, I think the Treasury market in particular has been comforted by the idea that your increased spending that's happening this year is being offset somewhat by tariff revenue being collected. So if we don't have that anymore, then certainly I think risk premium would rise because you get more worried about the deficit. I do think it's more of a short-term reaction than a long-term because there's a recognition that you have other ways to impose tariffs. You know, Trump is very, very happy with what's happened from a tariff perspective in terms of they're no longer seen as just a U.S. growth negative, and they are collecting significant revenues. So I think you do some kind of other tariff collection. That means that there's not a sustained impact. The growth impact is a little bit more difficult to interpret in terms of short term. It could be seen as positive for U.S. growth, which, you know, that means there's conflicting signals for the dollar in terms of U.S. growth positive, dollar positive, yields negative, premium in terms of that's more negative for the dollar. But again, if tariffs are just reinstated in a different form, it just means that maybe you're looking at sectors rather than countries.
US 10-year, 411, 420. Where am I going? Up or down?
I mean, this is the problem is we've just been range trading, right?
Yeah,
so for the
in
front
a really
end,
tight range.
Yeah, for the front end, I can very clearly tell you that I think the bias is upward for yields because we're at the lows of recent ranges. And I think if you get that strong non-farm payrolls print, which in line with consensus, then it's a very clear direction, especially because the Fed, it's harder to see them wanting to cut sooner. Their bias is holding. For the longer end, that bias, I think, is slightly to the upside. But I don't know what breaks that range until we get some convincing evidence of where terminal is. In the U.S. So it's,
you think you stay in it, therefore?
I think, yeah, we're going to stay in that range as a result. The term premium argument obviously impacts more at your long end, but I think non-farm payrolls, you're looking more at the front end, and the bias certainly for yields is higher today at the front end, particularly because both those risk tariffs as well as non-farm payrolls coming in line and a strong report with the unemployment rate really being the kind of important bit that you're looking at, point to yields being
so that's a flattening of the curve, not a steepening of the curve then, that you're seeing. All right.